Well, folks, if you happen to have been living under a rock these last 2 days, then you might not have seen that Mr. Musk is back at it again, talking about Dogecoin and sending the crypto to the moon. As you see here, Doge barking at the moon. And at this point, Dogecoin, it got up to a high of about 43 cents, guys. And I mean, this thing was down extremely low. It had about a 500% performance this week. And right now it's down 25%. And that's pretty much part and parcel of what you'd expect when you get into this crypto. Now, obviously, I'm a gold and silver kind of guy. And I just want to show you some statistics behind the moves of silver versus Dogecoin. Now, this is important because a lot of people who are into Wall Street Silver who are new may start looking a little bit over at Dogecoin and thinking, well, hey, I might as well get into this. Why do I have silver? Well, statistically, I'll show you some things that may make you reconsider that notion depending on your risk tolerance. So that is key. Whatever your risk tolerance is, you should, adjust your investment style accordingly. So here we have Dogecoin. And what I did was I took the historical price data and basically ran a few ran some statistical analysis on it. So let's take a look at Dogecoin as far as average returns, average positive returns, and average negative returns. So the average positive return is about 4.85%, which is pretty nice. The average negative return is negative 3.37%. So, compared to the average positive return, not too bad. But if you take a look at the frequency of average negative days, then we are around we have more negative days than we do positive days. And then when you add days where you have a 0% return, this outweighs the positive days. So essentially what I'm saying is if you decide to day trade Dogecoin, the odds are that you are more likely to have a negative day or a 0% day than you were to have a positive day. So obviously Dogecoin is something that if you want to get into it, day trading it is probably not a good idea. So holding it for a certain period of time is probably a better idea. And if we take a look here, yesterday we talked about kurtosis, and the kurtosis risk on this thing is fairly high. It's at 6,628, which is insane. And it makes sense because we just saw that it had it's down 25%. And over here, we have a huge, large negative bar. And this is for days when you have less than 6.5, a negative 6.5%. So if you have a day that's less than negative 6.5%, it would be included in this bar. So obviously, there are a lot of these days, but conversely, there are a lot of positive days that are greater than 6.5%. In general, you're going to have days that are between negative to 0%, negative 0.5% to 0%. That's one of the largest frequencies here. And just as I said before, you're going to have more negative days than positive days with Dogecoin. So obviously you kind of see that here when you compare the negative side to the positive side. Okay, so that's Dogecoin. Let's take a look at silver. So silver, I did the same thing. Pretty much same date range as well, going back to November of 2014. So with that same date range, obviously, when I look at silver and I look at gold, I look at consistency. I'm not getting into these things in order to make, leaps and leaps of money. I'm getting into it because it is money and I want it to behave almost similar to money, meaning I don't want it to jump around a lot. If I want to things to jump around a lot. I would get things that are very risky. So let's take a look here. The average positive days are more than the average negative days. So obviously that's a win for silver over Dogecoin. The average positive days over average negative days, I mean, honestly, they're pretty much neck and neck. They're almost like 50-50 here, even though they more so lean towards positive. The frequency percentage of positive days is about 51.25%. When you include negative with 0%, it's still around the high 48s. So obviously, if you wanted to day trade silver, which I don't recommend, you are more likely to have a winning day than a losing day, though they are very close. I wouldn't recommend day trading silver at all. Kurtosis, decently high here. But as you can see, most of the moves happen in the center, which is exactly what I want to see. I don't want to see crazy moves when it comes to a precious metal that I consider to be, or I should say, I don't want to see a bunch of crazy moves when it comes to a monetary metal, such as silver or gold. I want to see most of the moves happen in the center. Again, we looked at gold yesterday, and gold even has a better distribution of this. Almost everything is happening within the center here. There's almost like nothing here as far as 6.5% days or negative 6.5% days. So when we take a look at silver, obviously, if you want to have some safety, if you want to compare, a safe haven, I would much rather get into silver than to Dogecoin. But if you want to have those home run days, but also maybe even risk a not so great home run day, then definitely get into Dogecoin. Dogecoin is something that, to be honest, take a look at this. How often do you see a tail on a Gaussian curve be almost as high as the mean? That is insane. You don't even see that with most stocks. So again, guys, if you want to get into something very, very volatile, very risky, then yeah, go ahead and look into Dogecoin. But if you want something that is much more of a, what I like to say, steady Eddie, for me, I prefer silver and I prefer gold. So guys, let me know what you think in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.